All right, option traders, time for another edition of our chart reading videos, our free chart reading videos. We make these free videos for the trading community. We all want to help each other out, become better options traders. So I say this all the time. If you want to be a successful options trader, you have to have an idea about where the stock is going. Specifically the stock that you're trading options on. You just can't trade options out of the blue. You have to have an idea of where the stock is going or maybe going or not going if you want to have a successful options trade. So in these videos, we look at the charts, technical analysis. It will help your options trading game tremendously if you look at the charts and just see which way the stock is trending. Is it trending up? Is it trending down? Is it trending sideways? Those are really important things to know if you're going to be trading options. So in these videos, like we always do, I show you my charts, I show you the indicators that I use, and we go through the list of stocks and the indexes just to see what's happening. Give us an idea of what may be coming down the line in the future. So let's just jump right in like we typically do. All right, everyone, Lee Lowell here from smartoptionseller.com. Let's jump right in and talk about what the market has done and what we see maybe coming forward. If you've been following the markets, you know this past week, the U.S. presidential election was held and Donald Trump is the new or going to be the new president come January 2025. With that known, a lot of uncertainty was taken away from the market. We know the market does not like uncertainty. Now that we know who the next president is, the market had a huge jump for the last week. So let's just take a look here and we'll use the S&P 500. Now, all the main indexes in the US, we're talking about the Dow Jones, the NASDAQ, and the S&P 500 all hit all-time new highs. All-time new highs. So what you're seeing in front of you is a chart of the SPY, which is the exchange traded fund for the S&P 500. We look at the exchange traded funds because these are very widely popular, lots of volume ETFs that just track the indexes. So it's very easy to trade these things. The indexes themselves, you cannot trade like a stock, but the ETFs you can. So we like to look at those. So here we're looking at the SPY. Up here in this section is the price action. I look at daily bar charts, open, high, low, close bars, not candlestick bars. I know there's a lot of things on here, but it's really not that confusing. I have 3 moving averages that I use. I got a 20-day, 50-day, 200-day, all simple moving averages. You can see the blue line here. This is the 20-day moving average. Red line is a 50-day. Down here is a 200-day moving average. These other blue lines are all hand-drawn lines that show which way a stock or index is trending. We connect the tops, we connect the bottoms. It just shows you which way a market is trending. Super important because a stock or index will stay in a certain direction in that trend for a good period of time until something really pushes it in the other direction. And the thing that pushes it in the other direction usually is something pretty strong, like some kind of geopolitical event, something like a COVID, think about that, a war, whatever. Earnings announcements, very important for stocks. Every 3 months of the year, companies have to report their earnings. So those are major events that could turn a stock in another direction. So we draw these lines. These are called channels. Okay, you see it's a channel. It just gives us an idea visually of which way a stock is trending. Down here is the only other indicator I use. It's the RSI index indicator. It's an oscillator and it oscillates between overbought and oversold levels based on the price action above. And we have an 80 level up here and a 20 level down here. Just gives an idea of when and if the price action up here is getting a little overbought or a little oversold. A turnaround in the direction could be imminent or soon to occur after we're hitting one of these extremes. Okay, so let's talk about where the market has been, where it's going, and if that could help us with our options trades. So here we're looking at the S&P 500 index. All-time new highs after the election was called. Late Tuesday night, early into Wednesday, November 5th and 6th of this past week. You can see how the market just shot up. But even before a major event like that, you can see how a strongly trending stock can bounce either off the 50-day or the 20-day moving average as it's moving, in this case, upwards along its trajectory. So a lot of times when a stock pulls back, it will typically pull back to either the 20-day or 50-day. So if you want to be bullish on that stock or index, waiting for a pullback to the 20-day or 50-day is a really good thing to do. It will help your timing better. If you're making option trades and you're losing on these trades and your timing's just not right, try to get along on the trend when it pulls back. When it's in an uptrend, you want to see it pull back to a 50-day or 20-day moving average. The 200-day would really be the last line in the sand. So you can see here, as the S&P 500 has been going up, a lot of times it either bounces off the 20-day moving average or the bottom edge of the channel that's drawn. Okay, you can see it up here. I mean, it's been tracking the 20-day pretty good. And right here on the 50-day, this was right before the election. So this was like November, first, second, third, fourth, whatever. It was hitting on support right on the 50-day moving average. This was probably your last chance to get in on the bullish side if that's what you wanted to do before the election. And as you can see, it jumped from 570, almost hit or just about hit $600 on the SPY. So that was a nice little jump in just 1 week's time. So use the trend as your friend, as we say. Get in on pullbacks to the 20-day or 50-day moving average. You don't have to go all in. You can, dip your toes in because sometimes it'll fall. Like you can see, this is what happened early August 2024. The market came off really good and it dropped below both the 20-day and the 50-day. Here's the 50, here's the 20. Didn't get down to the 200-day, but look how strongly it bounced back. And then since then, it's been hugging along the 20-day moving average again. So you want to use the moving average as sort of your gauge of how to help your timing when it's time to get into a potentially bullish trade when a stocks or index is in an uptrend. Okay, so this is the SPY. I'm a bull. I've always been a bull. I say this in every video. The stock market is meant to go up in the long run. On a day-to-day basis, anything could happen. But if you want to make money in the stock market in the long run, you have to be bullish. That's just the way it is. Okay, we can look back at the monthly chart here. This is the chart of the SPY going back to the early 1990s. And the market goes up. The market is meant to go up because the indexes themselves are made up of good companies, profitable companies. And when a stock is lagging or a company's lagging, it gets replaced with a good stock or a better stock. So it's meant to go up over time. So if you want to make money in the long run, you have to be bullish on stocks. Okay, so that's the S&P 500. Let's look at the NASDAQ. Okay, let's go back to the daily chart here. We use the Q, the triple Qs. If you want to know the symbol, it's up here in the left-hand corner. This is the triple Qs for the NASDAQ. You can see the NASDAQ has also made all-time new highs this past week. Bullish. The most bullish quarter of the year is the last quarter of the year, October, November, December. Seasonally, it's just a bullish time of the year. And really, if you look at the studies, it does not matter, in the U.S. at least, who is president, whether it's a Republican or a Democrat. The market's going to do what it wants to do. It doesn't matter who's in office. So you can look back at the history, whether we had a Democrat or Republican in office, the market will typically go up. And in the long run, it will always go up. So NASDAQ's on all-time new highs. Let's look at the Dow Jones. All-time new highs as well. Now, what you can see is we had these channels. Okay, this was a sideways channel, which means it just can't break through one side or the other, either the upside or the downside, but eventually it will break through. And you can see this pattern that I drew right here. This is what's called an ascending triangle pattern. You can see it in blue. That means the price action is moving up, but it's been having trouble getting through this resistance area until there's enough pressure to finally blast through, which it has. And when it had the little pullback, just like I showed you on the SPY, it bounced right off the 50-day moving average here. So everything's looking pretty bullish as far as the indexes go. Indexes until the end of the year. Moving into the end of the year, I just can't see it moving in any other direction. Individual stocks could be a little different. There were some stocks that went down after the election. So let's just run through our list here and start looking at some stocks. I have my list over here. Okay, these are the stocks that I typically look at on a daily basis. And we're going to go through some of these. We're going to look at some of the bigger, more popular stocks because we don't really have time to look at all 3,000 stocks that trade on the indexes. So this is Microsoft. You can see this. This is what's called your congestion pattern, this triangle pattern, where the price action is wide and it gets tighter and tighter and tighter and typically breaks out in one direction or another once it gets to the apex. Well, you can see here it started to break out to the upside, fell back down, and now it's right smack in the middle again. So this congestion pattern really hasn't been decided so much yet. So you can always take these things off and draw yourself new patterns. None of this is guaranteed. None of this is 100%, but these patterns are based off decades and decades of market action, market movement. People are playing in the market. Fear and greed will always determine which way a market goes over time. Yes, it goes up in the long run, but in the short run, you'll have these patterns. So what we can also see, and you can redraw patterns. So we have, kind of more of a bigger congestion pattern here. So Microsoft's still kind of sideways. So right now, I have no feelings whatsoever which way Microsoft's going to go. If I had to make a guess, I'd say it's probably going to keep trading sideways until it gets to the end of this triangle and maybe blast out some way or the other. So for me, there's nothing to do in Microsoft. Intel, which has sort of been the ugly stepchild or the stepsister to AMD and Nvidia and Micron, Intel's really been, not such a great stock over the last couple of years because it's lost its dominance to these other computer chip makers. But as purely from a chart perspective, it looks like it may have found a bottom and starting to move higher a little bit. So Intel could be catching some mojo here and might continue to move higher if that's what you're looking to get in on Intel. My guess would be this bullish move will continue. Let's look at Nike. I mean, just a classic company. Everyone knows Nike, but it's been in a downtrend. You can see how it's just gone down, 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 down. Now, when there's a stock in a downtrend, the last thing you really want to do is try to pick bottoms, especially in a stock that's been in a long downtrend. It's really hard to make money buying stocks on a downtrend until it shows you that it's ready to go up again. And you could have been saying, okay, well, I'm going to wait for it to drop a little bit from here. And you could have bought some here. You're feeling pretty good. And then it drops again. And then it has a nice rally, but then it continues on its move all the way down, down, down. Now, I drew this pattern, this ascending triangle pattern. I thought Nike was having a nice bottom base here, and it was looking good, and then it dropped off again. We actually have a position on Nike. We have a bullish position on Nike, but luckily when we play our trades, we're put sellers. We sell put options. That's our main gig. We use very deep out of the money strikes, so we have a lot of cushion on our bullish trades when we sell put options, which means the stock could even drop on us and we can still make money. That's pretty incredible for an options trading strategy. Let me show you what we're talking about here. If you go to our website, smartoptionseller.com, you want to learn a little bit about put selling. What put selling is, get our free ebook right here. Click on this free ebook and you'll get, this is our Put Selling Basics ebook that I wrote. Scroll down. You can read some of the testimonials. Put in your name and email address in here. We'll send you an email back with a link for the free ebook. Okay, that's what we do. We sell put options at the Smart Option Seller. That's our main gig. We have our video series here. If you want to go a little deeper dive into what put selling is all about, get a 30-day free trial to our newsletter. And in our services tab right here, we have two newsletters. We sell single naked put options, our vertical spread newsletter. We sell put option credit spreads. We also have our coaching. If you want to get a step up, get yourself started with options trading, we can help you with that. Okay. So that's pretty much what we do here at the Smart Option Seller, but don't forget to get our free ebook. Let's go back to the charts here. So this is Nike. Let's take a look at some other stocks. Oracle, just a strongly trending stock here. You can see just powering higher, had the nice move this week after the election. So Oracle looks strong. I mean, it's in a good uptrend. I wouldn't buy specifically here. If you're bullish, I would wait for another pullback. Wait for it to pull back to either the 20-day or 50-day. That'll give you, that'll let some of this froth out, have it pull back. That's healthy. And then if you're still bullish, then you dip your toes and get in after that. AMD, we talked about that next to compared to Intel. AMD still kind of stuck sideways. Nothing really here for us to do except wait until it shows us whether it wants to go up or down. It's sideways action. Not much for me to comment on that. Apple, let's take a look at Apple. Everybody knows Apple. Here we had the ascending triangle pattern. Was getting ready to break out to the upside, but then it crept back out. But now it's got a little up move again, finding some finding some support right at the 50-day moving average here. You know in the long run, Apple's going to go up. We just want to wait for that timing pattern to be right. So I want to see a little bit more upside action, maybe get above this resistance area, probably in the low 230s, 235 maybe. And if it could break above that, then I'm a stronger bull on Apple. But for right now, I want to see a little bit more mojo come in here and get above this prior resistance line on Apple. But it's only a matter of time before that happens. Amazon looking strong. Got above this resistance line for a bit, came back down, and it came along the 200-day moving average, fell pretty good through it, but then it bounced back and found support on it again. And look how it's rallied up during the election week. So Amazon looks strong here. I think this might be all-time new highs. Let's take a quick look at the monthly chart. Yep, all-time new highs for Amazon. So to me, Amazon looks pretty bullish. Same thing as we just showed with Oracle. May want to wait for a little bit of a pullback. The moving averages will start to move up. The price action could start to move down, and maybe they intersect, around here somewhere. That's your higher probability timing pattern, where once the price action pulls back a little, where the upsloping, you want to see the moving averages upsloping, where they connect somewhere in the middle here, and then that's your higher probability timing pattern to get long on Amazon again. Netflix, we look at some of these more popular NASDAQ stocks because these are the ones that people are concentrating on. Netflix, just really strong in this channel. I drew this channel a while ago. You can see it's still moving higher. So, we can extend these things out. We can redo these. It's okay to redraw your trend lines after a while. So Netflix looking strong on both the bottom and top. So right now it's at a high. Maybe wait, just like the other stocks. We had a lot of enthusiasm towards the end of the week after the election. Maybe wait for it to pull back a little bit to either the 20-day or 50-day. If it blasts up through here, that's getting a little frothy for me, so I'd want to wait. But we have a trade in Netflix as well. We saw put option credit spreads on it, which is bullish, so we're doing well on that trade. CSCO, also another strongly trending stock. We drew these lines a while ago while it started its early descent up. You can see, or ascent, I should say, you can see it was in a downtrend and then something came along and pushed it in the other direction. So you want to draw these channels just to give you an idea of which way the stock is moving, and it'll help you with your timing patterns. You want to wait for it to pull back to the bottom edge of the channel, or you got the 20-day moving average here, pull back, and then get long for that next move higher. Okay. Procter & Gamble, it's been rough, fell through the 200-day, but bounced back really hard. So I don't have much to say about Procter & Gamble. Walmart, we all know Walmart, great company. Look how beautiful this is. Look how it hugs along the 20-day moving average. That's how you have to do it. Make sure you look at your charts. Make sure you got your moving averages on there, because when it does pull back, it will find support, or it should find support at one of the moving averages. And when it connects with it and starts to move up again, that's your timing play to get on board for that next leg higher. So use those moving averages as your guide. Disney, starting in its channel, it's moving along in its channel. You can see how it found the bottom right here at the 20-day moving average. I think it may have had earnings. Did it have earnings recently? That's why we had this little gap up here. But Disney, overall, it's not a very good looking chart. I don't really have much to say on Disney for right now. Tesla, okay, well, here we go. Finally, Tesla. Elon Musk and Donald Trump have gotten together recently. And since Donald Trump won, obviously you can see how Tesla has gone up. So at this point, Tesla's probably going to keep going up. I don't really play with Tesla. It's a hard stock to really get a grasp on, but obviously the election was really good for Tesla. So if you're a bull on Tesla, the only thing I can say is it'll probably keep going up. But personally, I have no stake in that. Let's look at some other stocks. Bristol Myers, some of the healthcare stocks were not doing so well recently. Some are, some aren't. We'll take a look. This is Bristol Myers. It looks like it's got some support here. You can see the uptrending price action here. So maybe on this next pullback to the 20-day moving average, getting close, if it pulls back to the 20-day and then bounces, that's your higher probability timing pattern to get bullish if you so desire. Now we can look at Pfizer. I've been talking about Pfizer. I bought some long-term deep in the money calls on Pfizer because I thought we had the bottom here, which we did, and I thought it was ready to go, and then it just keeps going sideways, and then this week it kind of crapped out. So I may have to rethink my long-term bullishness on Pfizer. Also, GlaxoSmithKline, GSK, also another pharmaceutical stock. You can see it's been in this downtrend. We drew the descending triangle right here where the price action was down. It found some support and then it popped down more to the downside. So that thing has kept going to the downside. Also, same pattern you'll see on Merck. This is Merck in the downtrend, but we drew this descending triangle right here and then it popped through it and kept going. A stock in motion will stay in that same motion or that trend until something moves along and pushes it in the other direction. These are downtrending stocks. There's no reason for you to be buying these things until it shows you it wants to start to go up. Don't be a hero. Don't try to be a hero picking bottoms. You're just going to get burned. Wait for it to show you an uptrend. We can look at Colgate. Colgate was in this nice, beautiful uptrend for so long, and then all of a sudden, now we're in the downtrend. It fell through the 200-day moving average. It's a pretty big move in a short period of time. So we have to see what Colgate wants to do here in the downtrend. I have no stake in Colgate, but I just want to show you what these patterns look like. CocaCola, also such a strong stock in the long run, good dividend paying stock, dividend king as we call it, has raised its dividend every year for more than 50 years. But this could be a gift to all of those of you who want to be bullish or get long finally on Coca-Cola. Has pulled back from about $73 all the way down to about $63. A $10 drop. It's pretty big for Coca-Cola. Maybe finding support on the 200-day moving average, really getting oversold on the RSI. So this could be a opportunity to get long on Coca-Cola, dip your toes, buy a few shares, maybe buy some longer term call options if you want. But this could be a higher probability play right here, finding support. If it continues to drop, it will continue to get even more oversold. So don't want to go all in right now. You want to make sure it holds here and starts to rally up again. So maybe dip your toes if you're a bull. Don't go all in yet. Johnson & Johnson also kind of pulling back here. This is the 200-day moving average. So it's on a downtrend. It's moving down. I have no stake in Johnson & Johnson. Doesn't look good for a trade in either direction. Adobe, not much happening with Adobe. It's kind of floundering here. Let's look at Nvidia. Nvidia, strong stock. Just keeps going up. We had the congestion pattern and it blew out to the upside. So it's hugging along the 20-day moving average here. Nvidia will probably keep going up. What else? We have a couple others. SMCI has just was a darling for a short period of time from early January into middle of March. Went up from, well, this is post-split now, so $30 up to $120, almost $125, and then it's given back all the gains. So sometimes you win, sometimes you don't. You got to know when to get out too. If you're holding a winner, make sure you take those profits. MicroStrategy, holding on to a lot of Bitcoin. Look how this thing has just gone up nicely. So that's MicroStrategy. Don't really have a position there. And lastly, GT, Goodyear Tire. We had a trade in there. We sold some put options, got a sign, sold some covered calls, and then finally it blasted out. We could have had the resistance right at $9, and then after the election, and it had its earnings too this past week, so it popped. So right around $10 is the next level. Here's the downtrending, down sloping 200-day moving average sitting right under $11 per share. So if it keeps going up, it's going to find resistance right there. So that trade actually is finally going to work out for us. We were floundering down here for a while, but look how quickly in just a couple days it goes from 8 to 10, and then it turns the trade around. All right, well, that's pretty much it. So the biggest takeaway here is make sure you look at the charts, do your technical analysis, look at your moving averages, watch the trends, draw your channels, see how the market is moving, how the stocks are moving. Use your higher probability timing plays. That is, if you're bullish and the stock's pulling back, wait for that next turn to happen, and then you get on board. You know, you can dip your toes in before going in a little bit deeper. All right, if this video has been helpful for you, we make these free videos. Well, we want to help everybody out. Give me a thumbs up, give me a like, leave me a comment, send me an email. I will always answer your emails. In the description below are websites and books and other software things that you can click on, things that can help you in your own trading, okay? Also on the screen, I'm gonna put a put selling video so you can understand a little bit more about what put selling is. Thank you very much. I will see everyone in the next video. This is Lee Lowell signing off.